Welcome back to Manila, at the annual meeting of the Asian Development Bank. Today I'm joined by Diwa Guinigundo, the Deputy Governor of the Central Bank of the Philippines. Deputy Governor, today we woke up to the news that in Argentina the Central Bank raised their interest rates up to 40% to tackle the depreciation of the Argentinian peso in the currency market. Obviously, central bankers across the globe are under pressure because of this big sell-off of currencies in developing countries. And to some extent, the Philippine peso is no exception. It's depreciated by 5% since the beginning of the year against the US dollar. So what is your take at the central bank? Are you concerned at all by this downward trend of the currency?
Well, I don't think the Philippines is in the same league. We believe that there are sufficient buffers in the Philippine economy that should warrant the stability of the peso against the US dollar. The economy continues to grow. In fact, in the last 5 years, the real GDP averaged 6.5%. Inflation is broadly stable. Our public finance position is very healthy and strong. In fact, we have done the first phase of the tax reform package that is expected to partly finance the new and ambitious infrastructure program of the government to ensure that our productive capacity continues to grow. Our external payments position is also very encouraging. The current account shortfall, I think, should be appreciated more carefully. There is a current account shortfall because the economy is growing and there are imports of capital goods and raw materials. And if we expand the analysis to include the entire balance of payments, we see that because of good corporate earnings, corporates have been purchasing foreign exchange denominated assets. So they require more dollars, and that contributes to higher demand for dollars. And some are in fact prepaying their external obligations. So in sum, what we're trying to say is there are macroeconomic fundamentals supporting the stability of the peso. So from the perspective of monetary policy, we do not believe that we need to institute or undertake a similar amount or magnitude of policy rate adjustment by the central bank. Yes, the peso is depreciating, but this is something that is expected when the economy is adjusting to new realities and new requirements of economic growth.
However, inflation, you mentioned inflation is a bit above the target or the estimates that we already discussed last year, this time around the Yokohama, the annual meeting of the Asian Development Bank. Today, inflation is at about 4.5%, which is the highest level since 2011. Yes. The central bank hasn't touched interest rates yet for many months. Is this a signal that a hike could also be around the corner also for the Philippines?
There are many things to consider before the central bank adjusts its monetary policy stance. We have kept the policy rate steady since 2014 when we tightened monetary policy by 50 basis points and increased the reserve requirement and some other forms of monetary tightening, because at the time credit was growing by close to 25-30%. So there is an imperative need at the time to tighten monetary policy. For this meeting of the Monetary Board on May 10, there are many things to consider before one is able to say that we need to adjust monetary policy. Yes, inflation for April went up from 4.3 to 4.5%. That's a fact. The other fact, of course, is if you look at the seasonally adjusted month-on-month, which will show the momentum of inflation, there was an actual decline from 0.7 to 0.3% month-on-month, which means that the momentum of the price inflation appears to be slowing down. That's another fact. The other issues that we need to resolve, of course, is one, is there a generalized spread of price inflation across the different sectors as well as products and services in the consumer basket? We have to find that out. That will define the inflation outlook, okay? And so far, for the first 4 months of the year, inflation averaged 4.1%, higher than the target of 2 to 4%. The other issue, of course, is inflation expectations. How is inflation expectation formed? Is it defined by market analysts, or should it be defined by a more medium-term perspective about how the inflation dynamics will fan out, not only this year, but also in 2019. Remember that the BSP is an inflation targeting central bank. We just don't look at the inflation number, the headline inflation number year on year today, but we also look at the future for the next 1 or 2 years.
A very final question. The US has approved this major tax reform, also
That's
the
right.
US, and the overall aim and target of the White House is to make the US market more competitive from a fiscal perspective and from an overall business perspective. And also the Fed obviously is hiking interest rates. So in Southeast Asia, but also in other parts of the world, there is this concern that this may trigger a capital outflow from developing countries back to the United States, a sort of a reshoring of certain industries. From your observatory in the Philippines, are you experiencing any capital outflow of U.S. capital or other Western capital back into the
Well,
U.S.
right
economy?
now, the numbers are saying otherwise. We are monitoring the trend in foreign portfolio investment. And for the first 4 months of the year, January to April 2018, foreign portfolio investment netted in, which means more net inflows of more than $800 million. I'm sure there were liquidations in the government securities market or in the equities market. But what we observed is that most of these assets, okay, are still with us here because the data on interim peso deposits continues to be stable. In short, once they liquidate their position in the GS or in the equities market, they're still here, waiting and seeing the options for their portfolio investment in the Philippines. Because I think what is at the back of the mind of the investors is that the economy is poised to grow by 7%, at least 7% for the next 4 or 5 years. And what more, considering the impact of the build project of the government. I think that will provide more impetus, more driver for more rapid economic growth. Of course, the issue there is we need also to look at the inclusivity of economic growth.
Deputy Governor Guinigundo, thanks again for being with us. Looking forward to catching up next year at the annual meeting of the ADB in Fiji. In Fiji.
Okay.
Thanks everybody for watching. You can follow all the coverage of the ADB annual meeting on our website, fdiintelligence.com. Stay tuned. Thanks.